Good afternoon. Welcome back to Money Control's live stream. You're watching Closing Bell with me, Lovisha Darad, and joining me, my colleague Yatin Mota. Well, what a day and what a week it has been for the markets. Sensex is up about 550 points and Nifty is above that 23,350 level. For the week also, we can see Sensex and Nifty both up about 4.2%. Best weekly gains in 4 years. So yes, February 2021, we surged about 9%, and this is the second time that, we are seeing, after 4 years, such a significant gains. Every week we have gained, every day of this week we have gained too. Very significant gains coming in from the broader end of the markets too. Nifty Midcap and smallcap indices up about 8%. Nifty realty and auto indices also were the top sectoral leaders for this week. Now if you look at today, barring Nifty metal, which saw profit booking, all other sectors have fared well. Broader indices too fared well, and the outperformed the benchmark indices. So we did start the day in the red, but ultimately brushed that aside. We also defied a tepid global handover, where Asian markets were largely lower and European markets also started on a back foot. So yes, we have defied a lot of global cues and global noise that also came in. Yatin, a terrific day for markets. Now that you are making a comeback on a Friday itself, safe to say that bulls are back.
Bulls are back, and what a start for the March end kind of scenario, when usually markets are tepid, markets are quiet. This March obviously significant because after the badgering that we saw in Jan-Feb for 2025 clearly meant that if March was bad, we could have been one of the worst performing markets globally. But as you mentioned in your initial comments, a 4-year level on the weekly gain is too good. 2021 Feb is when we saw a big weekly rally, but after that we have seen one of the finest momentum markets for the second last week of March. Obviously, if you look at the mid caps for the last several days, we have seen a good rally. In fact, from the lows, the Nifty is up nearly 1500 points, give or take, and the mid cap index is also up more than 4,500 points. So clearly, beat the mid caps, beat the large caps, we have seen an aggressive rally in the Indian markets for the last 2 weeks or so.
That's right. Let's take a look at some of the top Nifty gainers and losers at this point of time. Top Nifty gainers, SBI Life topping the chart with about 3% gains, ONGC with about 2.9% gains. For this week also, ONGC has done quite well, 8% gains coming in there. BPCL with about 2.7% gains today, and for this week also they have done well. NTPC with about 2.8%. Bajaj Finance, one of the top contributors to the Nifty's up move, with about 2.7% gains. So yes, we'll be discussing more about Bajaj Finance in detail later in the segment too. However, if you look at the top losers on the Nifty 50 charts, that includes the likes of Hindalco, some of the tech names which did not do well. That includes the likes of Infosys, Wipro with about 1.4% cuts. Trent, Tata Steel, Tata Group stocks, some of the Tata Group stocks not doing well, seeing a cut of about 1% too. But yes, a smart outperformance from the mid-cap and small caps once again today also, and of course this week also. But for today, Yatin, what were the top gainers and movers?
So, if you look at the mid-cap end of the markets, clearly strong moves coming in there, and I'm just looking at the list, and stocks like DB Realty rallied 20%, MRPL, RK Forgings, Tejas Networks. All of these stocks are moving anywhere between 5 to 15%. Losing side, TBO Tech saw a block deal of nearly 400 crores, wherein probably the promoters sold as per sources. So that stock was down 5%. CRISIL down 4%. As Shipping Corporation, which is SCI, after the 10-15% move yesterday, saw some profit taking, 4% down for that name. But clearly stocks like Manappuram hitting fresh 52-week highs after the deal with Bain Capital. That stock saw 8% move coming in. UPL, after agrochemical prices have been stabilizing in the global markets, that stock is at 52-week high, up nearly 2 percentage points in trade today.
That's right. Now let's quickly break down what stocks did grab limelight today. As we were talking about Bajaj Finance, well, that's the first stock in focus. Definitely the big headline today also after key management changes. There were concerns over whether Rajiv Jain, who is the current managing director, would be there after his tenure is ended, but that overhang is now gone, given that Mr. Jain has been elevated as the Vice Chairman and Executive Director for a period of another 3 years. He did express in the Q3 earnings call also that he wants to stay with the Bajaj Group, and now this move has taken place and the sentiment is quite upbeat on D Street. Now, as part of the succession planning, Anup Shah, who is now serving as the Deputy Managing Director, has been promoted to the Managing Director from next month onwards, and of course we saw the street sentiment regarding this too. Bajaj Finance, given Rajiv as MD, did play a crucial role in building 25 business lines of the company too. So his retention within the Bajaj Group is something that the investors were banking on, and finally it reflected on the stock price too. In his new role, Rajiv Jain would be spending a significant part of his time overseeing Bajaj Finance, but he also may supervise some of the newer initiatives of the group, such as those of healthcare, as well as lend support to the transition in the group's insurance companies. Yatin, brokerages were quite confident after this move, calling it well executed. And then we had brokerages sharing target prices of up to 11,000. CLSA gave the highest target price on the counter too. So the sentiment is pretty enthusiastic, so to say.
Yes, and most of the brokerages I was looking at have targets in excess of 10,000. In fact, CLS's target is indicating a 25% plus kind of upside potential even from the current market price. And Rajiv Jain's elevation comes as a positive news flow, given the fact that people were in two minds whether or not he'll continue with the Bajaj Group, what really happens to Rajiv Jain after his tenure ends. So ending all speculation and the kind of rumor mongering that was going on the street, Rajiv Jain gets elevated and the Deputy MD gets elevated as MD. So the entire management team, I think, is satisfactorily placed as far as Bajaj Finance is concerned, and the stock reaction on your screen is 3% higher for that stock.
That's right. But let's move on to the next stocks in focus. That was your IT stocks, which was quite the limelight today. It did settle flat in the green at this point of time. But however, we saw deep cuts early in the morning when Nifty IT, when the markets had opened. But as overall breadth improved, we saw Accenture warned of contract delays and cancellation as US President Donald Trump is trying to reduce federal spending. Given that Fed business accounts 8% of overall revenue for Accenture and 16% of the US revenue, for the impact for Accenture is likely to be felt more. Indian companies, on the other hand, they are likely to remain insulated given that they have low single-digit exposure to Fed's business. But one key point what led to the drag in overall tech sentiment is that there are signs visible in weakening discretionary spends once again. Analysts at Antique, for instance, in their note did mention that the risk of clients pausing their spending due to rising global uncertainties add to the headwinds. But they also stated that growth in managed services and bookings might help Indian IT companies offset some of these macro risks. Yatin, given that IT stocks have been underperforming lately, it's already in the bear territory, and now this warning that comes in after Accenture, experts that I spoke to, they've also been quite wary, and they have been saying that amidst this tariff noise, it's better to stay away from the export-oriented themes.
Yes, but two things in Accenture's results. Number one is the DOGE department, which is the Department of Government Efficiency, which has been driven by Elon Musk. Now, what they're essentially trying to do is, cut down on IT spends, which is related to the government agencies, in which Accenture has a good exposure. So probably if the spending of the government in the US declines, Accenture loses some business. And what does that mean for Indian companies is that the smaller contracts, which are getting bid, Accenture like companies or other IT companies which are now dependent on US government orders, which will not come in the future, would have higher competition in smaller ticket orders, and discretionary orders, which would probably squeeze in margins for Indian companies. So the concern really coming in from the Accenture result is that higher competition might impact Indian companies, and obviously, as you're mentioning, the tariff or the uncertainty probably impacts the IT businesses across India.
All right. But let's move on to one more stock in focus. That was your Manappuram Finance. The stock did hit a record high after the company announced a $1 billion deal with Bain Capital. Now, Bain Capital will look to acquire up to 42% stake in 2 steps, and they will hold a joint control with the existing promoters, who will also be holding a 29% stake. Now, after this development, CLSA shared an outperform rating on the counter and has raised the target price on the stock to about 270 rupees per share from 225. CLSA expects that a healthy re-rating for Manappuram is likely as the new management takes over. And under the new CEO, Manappuram plans to fast-track the gold loan segment, invest in scale up the MFI and housing and vehicles business, along with upgrading the company's tech capabilities. Jefferies too has raised the target price on the counter, but it remains a little bit cautious, and they have given a hold on the call on the counter. The brokerage sees execution issues in ramping up its gold loan business and clarity around the new management team growth and strategy. They believe these key things would be essential for a further re-rating of the stock. Yatin, Bain Capital, it has had a track record of running businesses in partnership with existing promoters. Now, this sizable stake also adds to the future confidence in the stock going ahead.
Yes, and I think, Manappuram trades almost 1.1, 1.2 times price to book value, on forward estimates. So, valuation wise, the stock remains inexpensive. Obviously, the gold loan story is something that probably would be quite aggressive with the private equity player onboarded. Obviously, another key issue for Manappuram, because of which the stock is at cheaper valuation, is the MFI, which is the microfinance book. There are concerns there. But with Bain Capital, co-promoting this company along with the existing promoters, there is an open offer as well to support the share price sentimentally. Would probably benefit the stock valuations for the short to medium term, and probably the reason why the stock, after opening slightly softer, gained nearly 8% in intraday trade.
That's right. That's right. What's the next stock in focus that you have, Yatin?
Yeah. So, talking about chemical stocks, they have seen a good re-rating. In fact, I was just mentioning SR is at 52-week highs. We have UPL, which is at 52-week highs. So, these agrochemical specialty chemical companies are looking at some benefits which are started to come in. In fact, the GM Finance note and the IIFL note indicates that we have seen some bit of price improvement in refrigerant gases, R32 and the sorts that would benefit companies like SRF as well as Navin Fluorine. If you look at the agrochemical space, companies like UPL as well as Atul Limited will benefit because we have seen a steady price increase to the tune of 14 to 20% in some agrochemicals. Not only destocking is helping, but now the overall demand is also picking up, which is leading to stabilization in agrochemical prices along with some price appreciation. Whether or not there is volume growth, whether or not this price hike will sustain is a question of time. But yes, all of these companies have witnessed some good price action in trade today as well as in the past few trading sessions. However, there is some trouble for the domestic chemical companies like Deepak Nitrite, companies like Aarti Industries, wherein they are importing, substitute products as well as trying to build import substitute products, because the Chinese competition is rising post the Ukraine war as well as some peace settlement in the Middle East. We have seen the freight rates drop by 30 to 40%, which means that imports are now cheaper in India. So, the companies which are making products for import substitution will face some headwinds, whereas the companies which are exporting, the likes of Atul, UPL, SRF, Navin Fluorine, they will tend to get benefited because of two factors, which is price hikes as well as lower freight costs, which will improve margins. So, a mixed bag for chemical companies, but the exporting companies probably would benefit, which are already at new 52-week highs or are trying to recoup after the sharp correction that we have seen recently.
That's right, chemical stocks that we need to watch out. But with that, we've come to an end of this edition of Closing Bell. Thank you for watching and have a great weekend. It's a wrap from Yatin and me.